What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see the bulls trying to battle the big bad bear, but so far the bear is holding its ground. Will the bulls be able to defeat the bear once and for all? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, just a quick reminder, this is the last day to claim 50% off 2 months of bank trade alerts for the Black Friday special, so do take advantage of that deal. If you haven't already tried bank trade alerts, now is the best time to take advantage of that discount. Alright, today's SPY was down 0.07% as we see a relatively flat day as the bulls are trying to defeat the bear at this very critical resistance zone, which is going to be the bear market resistance trendline, which is currently at SPY 409. Now, without a doubt, this is exactly where the bears are going to step in. Every other resistance level below this was a lot of dumb money shorting the market, and they are now completely roasted after the CPI data and the very impulsive bull rally that we had yesterday. And now you are going to see a lot more disciplined and relatively smarter bears just now trying to short the market. That is why this is going to be such a critical resistance zone, because they have great risk reward ratios at these levels and they are just now entering the arena. So if you are bullish, you need to be very cautious at this resistance. And even if we do start to get a bullish breakout above 409, we're still going to have critical resistance on SPY all the way up to 414. So this is going to be an extremely critical resistance zone, and that is why we have the picture of the big bad bear. So if you are bullish, you need to be very cautious at these levels. And if you are still bearish on the market at these levels, this is the perfect opportunity to start taking on risk for your short positions, knowing that you'll need to cover if we start getting the bull breakout above 414. Above 414, we can see SPY running all the way back up to 420 and 430, but we're not going to assume that has to happen. We need the bulls to prove it. Remember, this is a bear market below this resistance trend line, so it falls on the bulls to prove everything because the bears already have the advantage of the longer term bear market downtrend, and this is the exact moment in time the bears are going to start stepping in. Now, if you're bullish, you can remain bullish as long as SPY is above 399 to about 402, but you instantly need to get more risk off if those support levels fail, because we could quickly fall all the way back down to 390 and then fill the gap at 381. And remember, the bears take the elevator down, so you need to move very quickly as a bull, getting out of your positions. Now, you don't need to get out until support is lost because we still do have the short-term bull trend, but you're running into a longer-term downtrend in the bear market. So you do have a battle between two different trends with the short-term uptrend and the longer-term downtrend. So there is going to be a battle between the bears and the bulls as the short-term uptrend tries to converge into the longer-term downtrend. So heed my warning if you're bullish, this is extremely critical resistance and a great risk-reward ratio for you bears to start stepping in. Bulls can still buy the dip off support at 402 and 400, but as soon as you lose that support, you need to get risk off and expect a lot lower prices. On the Nasdaq 100 triple Qs, we were up 0.12% today, and as you can tell, the triple Qs bulls are also battling the big bad bear, which is right here at 293. If the bulls can break above 293, we're going to have resistance right around 296 to 297, but more than likely, if the bulls can hold above 293, they should be able to reach the double bottom price target at the gap close at 308, or at least at a minimum, test the negatively sloping 200 simple moving average between 305 and 306. Now that requires the bulls to hold the breakout above 293, because if the bears drive price lower, we could come all the way back down to 288 and the support trend line at 285. And then below that, we have one more risk level of support for the bulls at 282. If the bulls lose all of that support, it's a quick trip down to fill the gap at 268. And that is exactly what the bears are going to try to do. Push the triple Qs down to fill that gap below. The bulls want to fill the gap at 308 and the bears want to fill the gap at 268. So be aware of both scenarios and just let the price action guide you on which scenario is playing out first. Whether we fill the gap to the upside or the downside first is to be determined. You're going to know based on what the price action is telling you. And right now we are at extremely critical resistance, which means we are at increased probability to see a rejection from the bears. So if the bulls are victorious, we should continue to close above 293 and then start on that next leg higher to close the gap at 308. On the Dow Jones DIA ETF, we were down 0.5% today, and as you can tell, the Dow Jones is finding the resistance from the bear at the gap close at 347, and there is a very good chance that we are going to see high volume selling from 347 down to fill the gap at 331. In the event the bulls do break above 347, the next resistance will be at 353, but the Dow Jones is looking the most overextended and definitely at the most risk of starting to roll over because you have a lot better risk reward ratio as a bull in the other indexes like the triple Qs. So watch the Dow Jones have very critical resistance at 347 with downside support at 342, 337, and then below that we should easily see the bears filling the gap at 331. On the Russell 2000 IWM ETF, we were down 0.22% today, and yesterday we did get the bull breakout above 186, and we're well on our way to the next resistance, just right around this resistance at 190, but we're instantly finding sellers around that zone. Bulls can stay bullish as long as we're above 185 down to about 184, but instantly need to get risk off if we break down because we're very likely going to see the bears trying to fill the gap at 178. The next bullish breakout will be the break above 190, which should send the bulls back up to the next resistance at 195. So for the time being in the small caps, you can stay bullish above 185, but just be cautious of the gap fill below if that support fails. On the ARKK ETF, we were up 1.12%, and ARKK is battling the resistance right around 38, which is this negatively sloping 50 EMA. If the ARKK bulls can push through 38, then we could see a run all the way back up to resistance at 40, and that is still going to be very strong resistance in this bear market. We have the outstanding gap to fill to the downside with about a penny left, which is right around 34, with the downside support on the way there at 36.5. Keep in mind, this is still a very powerful bear market at critical resistance, so you need to be very cautious of more downside. On the VIX, we were down 3.6% today as the VIX continues to put in more red candles and did get a daily close below 20, but do keep in mind we also saw the same exact thing at the end of the bull rally back in August. So while the VIX closing below 20 does tell us fear is leaving the market and is typically associated with being a bullish event, that is exactly where the bears loaded up for their short positions last time around. So do be cautious of another repeat of that event. If we continue to see the VIX crushing below 20 and start heading down towards 18, that is going to be synonymous with a bull trend, and we should see the bulls defeating the bear at critical resistance, but we're going to wait for confirmation of that, and we're not going to make any assumptions about its occurrence. On Bitcoin, we're currently down 1.41% as Bitcoin is battling around this resistance in the 17,000 resistance zone, and so far we're seeing sellers stepping in on relatively high volume. A rejection from this resistance sends us back down to support at 16,000, and if we lose support at 16,000, the next downside price target will be at 14,395. Watch that critical resistance at 17,550 because if we do break above it, we should run all the way back up to 19,000. On Amazon stock, we were down 1.08% today as we see Amazon finding resistance right there at 97, but still closing above 3 of our 4 moving averages. So if we do get a bull breakout above 97, we should see a run back up to 102. However, a rejection from 97 can easily send us down to fill the gap at 89.5. So there's definitely going to be a lot of downside risk while we're trading below resistance at 97. Below the gap fill, we have support at 86, and below 86, we have a valid downside price target at 77 as long as we're in this downtrend. On Microsoft, we were down 0.18% today with the second day in a row closing back over 252, so you can stay bullish with this as your risk level for the gap close at 265. If we fail to hold support at 252, we'll likely come back down to 247 and 242, and then if we lose all of that support, you're looking for the gap fill to the downside at 228. On Nvidia stock, we're up 1.25% today as we continue the bounce off of that bounce or die support at 156. We broke through 166 yesterday, and we're well on our way to testing the resistance very soon at 177. This is going to be the very strong bear market resistance in Nvidia, so expect bears to show up at that level. A rejection from 177 sends us back down to 166 and then 156. On Tesla stock, we were flat on the day, going absolutely nowhere because we did see the bulls stalling out around this resistance between 196 and 197. A rejection from here sends us back down to 188 and then back down to 178, and below that we do have a gap to fill around 171. Upside resistance breakout will be above 197 for a retest of the resistance at 205. And above 205, we could make a run all the way back up to 230. On Apple stock, we were up 0.19% today as Apple continues the bounce back over that critical resistance at 146, which is now acting as support, but we are slamming right into the resistance trendline just below 150. So right now, Apple is going to look a lot more bullish if it can break out above 150, and then we could see Apple running back up to 155. But the critical downside support that needs to hold for the bulls is 146. Otherwise, we're at risk to seeing the bears driving us back down, all the way down here to fill this gap at 138. So do keep that in mind. A rejection from here could send Apple for that next leg lower. The financials were down 0.58% today, continuing to hold above the support at 36 and still in a bull trend. The industrials were up 0.03% today, still looking bullish with both price action and trend, and still above the support line at 99.6. The healthcare sector was up 0.29% today, getting a little overextended outside the upper Bollinger Band and still looking bullish with the bull trend as long as we're above 134. The energy sector was down 0.33% today, getting rejected from the resistance at 92 and closing below the 20 simple moving average yet again, which means we could be seeing the energy sector rolling over and trying to get down to 84. Watch that support right here at 88.5. So jumping back over to the S&P 500, this is the critical resistance the bears need to defend, and they are going to show up at these levels. So as bulls, be very cautious at all of this critical resistance. You can always buy the confirmation of the breakout of resistance. There is no reason to take on additional risk at these levels. Bears, it's open season for you to short this market because you have well-defined risk-reward ratios, and this is exactly where you should be taking on risk while your risk is well-defined and you know exactly when to get out if you're wrong. So make sure no matter what direction you're trading, you have a solid trade plan and you're managing risk very tightly, and always make sure you're staying disciplined and following your plan. Also, don't forget to take advantage of the Black Friday special deal off Bank Trade Alerts where you can get 50% off 2 months of Bank S Plus or Bank. All you need to do is apply the coupon code Black Friday at checkout. Bank is absolutely crushing the market, beating all of the indices, including the TQQQs and the SQQQs, which is the only thing Bank trades. So take advantage of this special Black Friday deal now and try out Bank if you haven't already. And keep in mind, this is a limited time offer that will be expiring at the end of November. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.